oil plunges 15%, European stocks hit a 4-year high, and Bitcoin just completely shatters the $71,000 ceiling. And all of this is triggered by a sudden 14-day U.S. Iran ceasefire. Welcome to Casutalks.
Oh, it's just a massive global recalibration happening in real time. Literally real time.
Yeah, totally. So today, our mission is to do a deep dive into the source material.
Yeah.
And basically unpack how a fragile, and I mean very fragile, 2-week pause in the Middle East is just instantly rewiring energy markets, crypto, and global supply chains.
Which is a huge undertaking for one chat, but we're going to do it.
We are. But just a quick note before we start. Like, you've got Trump claiming a total victory, right? And Iran is out here framing the truce as this massive diplomatic win.
Yeah.
We are not taking sides today.
No, not at all.
Yeah. Our objective is purely to break down the economic facts for you. Just the numbers.
Right, because the immediate economic shockwave here, it really centers on the Strait of Hormuz. So Pakistan actually successfully mediated this 14-day ceasefire, and honestly, just the promise of the strait reopening sent Brent crude tumbling below $100 a barrel.
Which is wild.
It's the biggest daily drop since the pandemic. It is so dramatic.
Okay, but let's visualize what's actually sitting out there right now. Because we've got roughly 200 stranded tankers carrying something like 130 million barrels of crude oil.
It's staggering.
It is literally a billion-dollar traffic jam.
Yeah.
Just the ultimate highway nightmare.
Yeah, a billion-dollar traffic jam is exactly what it is.
But I'm looking at this timeline, right? And I just have to ask, is 2 weeks actually enough time to clear a backlog that massive? Especially when insurance companies are probably, like, absolutely terrified to underwrite any movement right now.
No, I mean, you're totally right to be skeptical on the timeline there. Insurers aren't going to just suddenly authorize safe passage because a 14-day clock started ticking.
Right, they need actual guarantees.
Exactly. In fact, seafarers in the region are reporting that ships haven't moved an inch yet, not 1 inch. The holdup is largely tied to Iran's proposed 10-point plan, which it demands a $1 to $2 million transit fee per tanker.
Whoa. Which, I mean, it sounds like a standard toll road when you say it like that, but economists are calling it a de facto nationalization of the strait.
Exactly. And to understand why that matters, you really have to look at international maritime law. The Strait of Hormuz is an international waterway.
Right, nobody owns it.
Exactly. So by unilaterally forcing ships to pay this massive transit toll, Iran is essentially claiming sovereign ownership over the passage.
Oh, wow.
Yeah, it sets a super dangerous precedent for global trade. And then you add in Trump's new threat to slap 50% tariffs on any nation supplying weapons to Iran, and the geopolitical risk is still, frankly, incredibly high.
So supply chain managers are basically still pulling their hair out right now.
All losing their minds, yeah.
But the falling oil prices create this sort of bizarre ripple effect. Because crude crashed, fears about global inflation have suddenly eased up.
Right, the pressure's off for a second.
Yeah, and when inflation fears drop, investors suddenly have a lot more appetite for, high beta, volatile assets.
Which naturally brings us right to the crypto markets.
Of course it does.
Bitcoin jumped 4% to hit $71,000. Ethereum is up over 6.5%. And Coinbase just secured a derivatives license in Australia to kind of capitalize on all this momentum.
Which is huge for them. But the underlying mechanics of Bitcoin's surge are actually detailed in this fascinating new JP Morgan report.
Right. The report showing Bitcoin's production cost dropped to $77,000. But the actual cause of that drop is what really gets me.
So weird. Walk us through it.
Okay, so it sounds super counterintuitive, but here's how it works. Severe winter storms in Texas recently knocked these massive mining farms totally offline.
Oh, right, the power grids.
Yeah. And at the exact same time, unprofitable miners just simply quit the business. So because there are fewer computers competing to solve the blockchain, the network's algorithm actually automatically lowers the mathematical difficulty. So that makes it cheaper and easier for the remaining miners to mint new Bitcoin.
Okay, let me just pause here to appreciate the absolute, utter absurdity of global economics.
Nope, that's pretty great.
You're telling me that bad weather in Texas and a 2-week geopolitical pause, half a world away, are somehow, like, conspiring to make your crypto portfolio look better?
I mean, yes. It perfectly illustrates how intertwined these seemingly isolated events really are. A stalled tanker in the Middle East directly influences the viability of a server farm in Texas. It's fascinating.
It really is. Okay, but let's look past the next 14 days for a second. Because this entire market rally really hinges on this incredibly fragile 10-point plan being discussed in Islamabad, which, by the way, demands a U.S. withdrawal and the lifting of sanctions.
Yeah, which leads to a really interesting question that the markets just aren't pricing in yet.
What's that?
Well, even if these talks succeed, right, and a permanent peace deal is signed, will global shipping insurance premiums ever actually go back to normal?
Oh, that's a good point.
Or has the baseline cost of moving goods through international waters just permanently increased, regardless of the diplomacy? Like, the risk is priced in forever now.
Man, that is a fantastic thought for you to chew on today. Has the cost of global trade just changed forever? We will leave it there.
A heavy question to end on.
Definitely. Thanks for joining us today, and be sure to come back tomorrow for more news.
Yeah, please do.
And hey, if you enjoyed this, please like and share the show, and drop into the comments below and type the phrase $1 billion traffic jam. We love reading those. See you next time.